So welcome to the final frontier. By this time, you will have developed your investment plan and maybe even tested it. But this is the time that I reveal to you that it's not going to be a walk in the park for you to implement your business plan, your investment plan. Remember, I asked you to dig up things that you're passionate about. That those are the reasons that you're doing this exercise, the reasons why you want to start investing, why you want to find investing success. Well, this is where that exercise pays off. You see, now that you've built your investment plan, the rational part of the exercise is over. The role of that part of your brain that deals with numbers and logic, that part is over. Now's the time for the part of your brain that feels, the part of your being that feels. Now is the time to figure out how to handle the part of that brain that feels. Because no matter what I tell you about the emotional process of investing, you are likely to make the same emotion-led mistakes that plague all of us. And I mean all of us, professional, amateurs, it doesn't matter. The only difference is that the professionals have understood how to handle those emotions, how to develop or mature those emotions, how to develop the understanding that comes with those emotions. And of course, there is a way to counter this, the influence of these emotions, and I will show that to you. But you will not be able to execute this exercise if your desire is not strong enough. So once again, bring out that piece of paper where you wrote down your reasons for investing and really feel what it will feel like once you've achieved the objectives that you've set for yourself. Because unless your desire to succeed is not strong enough, you will not be able to go beyond your fears and take the action that is necessary to develop these emotions. So is your desire strong enough? We shall see. Now, operating in the financial markets offers a lot of freedom. And this is freedom that really draws all of us in. We want that freedom. It is something that we all naturally want. But to operate effectively in this environment, we need to create the appropriate psychological resources, which means that we need to have the right mental makeup to be able to execute that flawless execution that I've been talking about all this while, and be able to operate in this environment that offers, no limitations. Now, it's ironic that you enter the market because you want freedom, but unfortunately you have to set those rules. Now, it's ironic that we need to set up rules in an environment that offers us freedom. But without these rules, we can land up doing a lot of damage to ourselves, because this environment has the propensity, has the ability to create that kind of extensive damage. So to operate effectively in the trading environment, we need to establish rules and boundaries to guide our behavior. However, these rules and boundaries need to be created by us and applied by us. So there lies the problem. Since these rules are created by us and not, externally applied to us, we tend to give a lot of leeway to these rules. I'll hold on a little longer than I've set the rule for. I'll get out earlier, or I'll get out later than I had set the rules for. And this really creates a big problem, a big tug of war within us, because it becomes very difficult to operate in a disciplined manner when there are these emotions that are tugging at us in different directions, of emotions of greed and fear that constantly battle for our attention, specifically in this kind of a stressful situation where real money is involved and you're seeing actual losses or you're seeing actual profits. So that's really the dilemma that we're trying to address over here. There is a way, and I'm going to show you that way, but as I said, without that clear goal that you want to achieve, this is going to be a little difficult, because to prevent the possibility of damage to ourselves, we need to create this internal structure in the form of specialized mental discipline. Because without this, we will not be acting in our own best interest. So what is the solution? Let's get on to that. The solution to counter the effects of emotions on our decision making is to not look at trades on an individual basis. We need to look at our trading system as a collective. So we will be looking at our investments as a series of trades and not as isolated individual transactions. Now, in his book, Trading in the Zone, Mark Douglas talks about how hotels spend billions of dollars in developing casinos, not only in the construction of those casinos, but also in driving people into those casinos. You see, this is because they know the way the games are designed to be played. They know that the way the rules have been set up, they have a statistical advantage as far as those games are concerned. You see, the house always wins. The reason this is right is because the way the games are designed, the house has a statistical advantage. But the house will not always win if it looks at individual isolated transactions of each of those wins. Sometimes the people win, but most of the time, overall, the house wins, the casino wins. But for their advantage to work, they need to take the other side of every bet that the client places. For example, in the game of blackjack, the way the rules have been set up, the casino has an advantage of 4%. So over a series of transactions, they tend to make a profit of 4%. This means that with $1 million worth of transaction, the casino will make about $40,000. Now, this is important. Remember, The casinos are spending, or the hotels are spending billions of dollars in developing these casinos. The reason they're doing that is that as long as they're taking each and every transaction, the other side of each and every bet that are being placed on the floor, they will tend to make about 4% in this example. But they don't know which of these bets are going to be winning and which of these bets are going to be losing. They can't pick and choose these. They have to take all of them. And that's really the casino mindset that I will be talking about again and again. Look at your trades as a series of trades, not individual trades. Don't be therefore overwhelmed or upset with the results of one individual trade. If you look at your trading system as a whole, then you will understand that the kind of returns that you're able to make. You need to look at your trading system as a whole. I have named this course the investment system, and there's a reason for this. This is it. The reason I call it the investment system is that you need to look at it as a whole. You can't look at it as individual trades. I don't care about individual tips that you get or tips that you get for individual trades, how they work out. What I need to have is an investment system. The reason I need to have an investment system is because of this, because I need to look at the market the way it is designed to be looked at. I need to have a system that works over and over again. And through this kind of approach, the casino way of thinking, you also will be able to develop the mindset that is absolutely important in the trading environment. Now, just like the casino, we also have a trading advantage. The way we have designed our system, the way we have applied our risk management system, we know that there is a statistically measurable success ratio. Let's call it 60%. However, this success ratio will work over a series of trades that we take and not individual trades. For example, we know that the statistical probability of tossing a coin and calling it heads is 50-50, 50%. But if I toss a coin and I get tails, am I going to say that the coin is rigged? No, right? But it takes a series of these coin flips to understand that the probability is 50%. Just like that, when we look at our trading system, we will also need to take a number of trades before we understand or before we have the success ratio working in our favor. Therefore, just like the casino, we need to look at our investment strategies as a series of trades and not as individual trades. Now, I've come across many clients, both in my hedge fund as well as at the income option, who get swayed by the results of the previous trade. And it's not uncommon. I went through it myself. We get influenced by the result of our last trade. If the last trade was a winning trade, we're more than happy in taking the next trade. But if the last trade was a loser, we tend to start questioning our strategy. We tend to start having doubts. Is it going to work? Is it not going to work? Should we scale back? All those questions start coming in. And it takes an extensive amount of coaching on my part to have them act appropriately. So to become a successful investor, to have the right mindset, we need to put together a comprehensive trading system and then execute it flawlessly. I've said this many times over, the execution is really where the difference is. But to get to that level of discipline is not easy. It takes professional investors years of training and experience to get that kind of, to develop that kind of mindset. Luckily for you, there is an easier way. Now, to develop the kind of discipline and outlook that is necessary to operate as a successful investor, we need to have a strong belief in our trading system. But to have that strong belief, we need to see our trading system work. And that's really where the catch is. We won't be able to get confidence in our trading system if we don't execute it. And we will not be able to execute our trading system if we don't believe in it. So here's the exercise. The first step towards all this, of course, is to do our backtesting. We've already spoken about that. Our backtesting allows us to see the kind of results that we anticipate, that we can anticipate. But again, it's all historic. We can develop a little more confidence when we see our trades work in the live market, paper trading. But it's really when we start executing our trades in the live market itself with actual money that our confidence truly gets cemented. Now, to build that confidence and to build the right mental makeup that is required in the market and to build the right mental setup, we need to execute our strategy over a set number of trades. Now, this sounds very easy, but it is actually arguably the most difficult thing that you can try to do. Now, to do this exercise, we're going to take the investment plan that you've already created. Don't worry if you feel that the performance is not up to par. That's not important at this moment. What is important is to develop, as I said, the right mindset. The following steps will guide you through the exercise setup. Firstly, decide on the minimum number of transactions that you will take. Typically, 15 to 20 is a good number. If a strategy is not working over 20 trades, it's most likely that it's not going to. Now, decide on the maximum risk per trade that you're going to take. But you have to remember that you have to be absolutely fine with taking this risk. For example, if you decide that the risk per trade is going to be 1,000 rupees, then you have to be absolutely okay with taking the total amount of risk. Now, the risk in this case is not just 1,000 rupees. You have to presume that all the trades will go against you. Let's say you're taking 20 trades, and if all the trades work against you, they are loss-making trades, an unlikely scenario. But if all the trades are loss-making trades, then you're still okay with the kind of loss that will throw up. So in this case, 20 into 1,000 rupees of risk is 20,000 rupees. If you're okay with taking that risk, then go ahead with that kind of risk. If not, then reduce the per trade risk till you are absolutely fine with the total amount of risk. Now, using your market timing strategy, analyze the data and set up the trades that you will take. If your strategy works on your broker providing a certain tip, set that up. If it is a technical indicator that will give you the entry, set that up. Whatever it is, set up your trading system so that you're ready to take the trades when the opportunity presents itself. You can set up your trading platform to give you a price alert so that you know when the price is in your trading range and you can go in and execute those trades. I've always found that an external trigger is better at prompting me to take action than an internal trigger. So that always helps. Have a price alert that says, okay, now's the time to take the trade, go in and then execute those trades. But remember, the trades have to be planned beforehand and as per your rules. So every transaction, you have your overall system, but you will also have your trade plan for individual trades. Now, here comes the hardest part. You need to now execute each transaction as per your rules. If you stick to your rules and execute the next 20 occurrences of your market timing, then you will develop that sense of belief in your trading system. You will see the trading system actually work in front of you. Now, this belief is really what drives your mentality. This belief is what you will rely on, or this experience is what you will rely on when you will tend to make emotion-led mistakes in the future. And finally, use the worksheet to monitor each of these trades so that you get that overall performance report that we have in the file. What this will do is it will give you a picture that you will depend on in the future. What I mean by that is that when you are tending to make an emotion-led mistake, you will be reminded of this picture. And this picture will remind you that it doesn't matter what that individual trade is or what the outcome of that individual trade is. What matters is that you take the next step. What matters is that you follow your rules. Because if you don't follow your rules, those losses will increase, those profits will decrease, you will land up making mistakes that will jeopardize the system. This experience will show to you that irrespective of what the outcome of that individual trade is, you will make money if you follow the rules and if you execute flawlessly. So it doesn't matter how the previous trade went. Your job is to execute the next one and then the next one and the next one. Just like the casino, you have to take the next bet. Now, I know gambling and investments is not something that you want to relate to or equate to. But remember, the casino is not gambling. The gamblers are gambling. The gamblers are the ones who are taking a chance. The casino knows that statistically odds are in their favor. The casino knows that the system works for them. And the reason that they believe, because they've seen it work over countless trades. Do yourself a favor. Go through this exercise. Understand, see your system work over a number of trades and develop that confidence in your system that will make sure that you have the professional mindset going forward. And one last thing before I conclude. 20 trades is something you may need to repeat. You may not find success in the first try. I know I've struggled with the execution of these 20 trades. There have been a number of tries that I've had to make before I was able to actually successfully execute all 20 trades, and then repeated this exercise a number of times to cement that professional outlook. If you're not able to go through this exercise, don't beat yourself about it. Try again. It is arguably the hardest thing that you can try to do. But believe me, once you've mastered this, then success is a guarantee. You will be able to take any system, however mediocre it is, and deploy it in the real world and get massive success from it.